Mic check and screen share check, please. Ready? All right, let's get started. This is Ken at Tortoise Capital Nightly Strategy Podcast for March 4th, 2024. We'll start, as always, with the 30-minute charts. This is the hybrid swing. And I would say we generally hold positions one day or less, and maybe 25% of the time hold it 1 to 2 days, and maybe 5% of the time we hold it 3 to 10 days. So this is really a hybrid intraday, looking for intraday opportunities, and then occasionally, like 25% of the time, maybe finding things that are worth holding overnight and then carrying over for multiple days. So this is relatively fast. I think of it as a swing because we're trying to get well started with swing trading one day at a time, and then try to get a burst of price action and money to justify holding it overnight, and use markets money to pay for the overnight risk and then to carry on. What's tricky about it right now is that the market is in such a exaggerated state of excellent performance that there's a lot of nervous in the service people, including myself, who are concerned about the market getting away from itself and being worried about sharp sell-offs. Volatility is suggesting that could happen. The price expansion recently is causing that to happen, but we're going to keep trading the intraday stuff because we can manage that price and see the directionality, and we're trading patterns in both directions. So as long as we're getting enough volatility, and hopefully if we get some more volatility, we'll have even more of an opportunity to trade these one-day positions. And then if we do get a turning point, then we would see more of these overnight holdings be for ones that are on the short side. But as it stands right now, we really want to be on the long side most of the time. You'll see a bit of a difference when we get to Mexico. There's reasons to want to hold that short. But most of the time, we're holding them long. And but if we actually start seeing the longer term market rolling over, then that could lead us to some increased number of positions held overnight on the short side. So that gives you kind of a template for what it is that we're trying to do with the hybrid swing. Hybrid swing sits in the middle between day trading pure and then swing trading pure. In swing trading pure, we're looking to hold positions 2 to 10 days. And ideally, we could find some things that are moving out smartly that allow us to hold a position overnight on the swing. And if that continues to follow through for a couple days, then that could lead to markets money funding the position for the longer term swing. And maybe that could even become a core position if it continues to move out smartly. If you take a look at XLI, for example, the S&P Industrial ETF, that actually falls into one of those categories where the outperformance, which started with persistent gains on the day trading and hybrid swing, have led to longer term swing positions. You can also see that in ETHE, where we started trading that around $7 after the sell-off. And in a series of day trades and hybrid swings, we've been making some gains that have allowed us to build out some of that position for the long term. And now it's at 29 or 30. So that has turned into quite a nice position, completely funded by the shorter term trading. So that's how these things kind of fit together in a meta system. There's some real systems thinking going on in that one. Okay. All right. So let's get started then with Alcoa. We're looking at the yellow box represents 1 day today, from open to close. And then this is the 5-day look back, coming back that way. So this was a 5-day high, 5-day low, I think, was down here. You see the Bollinger Band mean, that's the 30-period simple moving average. You see the volume weighted average price here, the orange. You see the 10-period Bollinger Band plus or minus a half, called the dragon. You see the tuned PSAR, parabolic stop and reverse, which we use to kind of guide our directional bias. That's we use a form of the parabolic stop and reverse with a special way to calculate price in that. And I think that's, yeah, and then down here we have the seasonality of the moving average convergence divergence 1030 that uses some special form of price to compute the signal, the 5-period moving average as the delay, and then a buffer of normal, which we call the Red River, which is a 30-period Bollinger Band on the signal line plus or minus 1. That gives us a smooth form of looking at the price moving averages above the box here into the price area. So tactical price, and then longer term moving average convergence divergence to help us appreciate some of the longer term trends. So I say all that just simply to say, here's what we got going on. We closed the Alcoa trade yesterday, Friday, at the close of the day. It gapped down a little bit, sold off, held support. When it crossed the Bollinger Band mean again and the middle of the river, we got long on a 1, 2, 3 entry with a standard risk box. It didn't really follow through much, but it did give us a 0.5 gain. And if you don't want a half an hour gain, just send it to me. No overnight risk. AI, no trade. Caterpillar, we had 2 positions long from last week, both well in the money that closed here. There was a minor gap down, then immediate recovery. And then it started to back and fill. This feels like a natural resting point. So when it pulled back near the end of the day to the PSAR, we were still well above the mean. We cashed that win. So on 1 unit of risk, the first position earned 4R, second position earned 2R. So that's a plus 6R trade in about 3 days. And that just feels like a natural move. Now, tomorrow, if this continues to break out above the 5-day high, which is also the 10-day high and the 30-day high, why we would just get right back in. But I want to see price action in the morning to justify that rather than taking an extra overnight risk. CLF, this is a steel company, Cliff Natural Resources. So here was last Friday's trade. It monkeyed around at the close. It gapped down. It broke below the PSAR. So we got short with a standard risk. It collapsed all day. Then in the last half hour, it reversed, hit the skin of the dragon. So we exited with 2R and happy to get that. That one is definitely in play. This buying pressure at the end of the day makes, which then it ran up and then ran all the way back down. It makes me think this is in play tomorrow. So if we have a non-directional bias, we can play a breakout from that price level and be ready to go in either direction for a large move. With a move like this and a move like that intraday, it's absolutely in play. And this whole price level in here is a critical state where it has moved up, it's moved down. So this could equally likely move in either direction. So we like that one to be in play tomorrow. CVS. We tried a gap up and go, took our loss when it failed early, and then it went nowhere, so -1. DIA, we tried a 1, 2, 3 early entry in here. It was a 1, 2, 3 on a 3-minute chart, not the 30-minute, but it was above the VWAP, which was rising, above the Bollinger Band mean, which was rising. The R10 reversed. That's a good low risk entry. It ran all the way up to 391, but came back and we ended up scratching, gave it as much room as it could. But a scratch there. Disney, we tried a gap and go, it failed. So we made a little profit. It then held support above the PSAR, above the Bollinger Band mean, recovered. That's a 1, 2, 3 entry. So I re-entered about 90 minutes later. I decided I want to hold this one because this is a long-term recovery project, and I like the afternoon move. So we're holding 1R, market's money. It's at a 10-day and 30-day high. So I like this as a chance to have some strength tomorrow. So we'll play it that way. No trade in Devon Energy. Emerging markets was an intraday short for a fraction. Didn't collapse as I might have hoped. ETHE was a gap and go, so tight risk, and then it took off and just ran. That's about 5R and above 31. So I'm looking to hold that one long term. So we held that one overnight. Good shape on that one. EWW, this is Mexico. So it rolled over with a lower high. So here was the previous peak of the RL10. Here was the intraday RL10 peak, and the PSAR had already flipped. So when this came this way, 1, 2, 3 entry short, standard risk. It sold off to the low of the day, except for the gap down. I like this as a sign of weakness. We're holding +1R, and I'm looking for it to come down and test today's low and then the weekly low from last week. So Mexico was weaker than Brazil, and Latin America was the weakest regional sector. So that was one I wanted to have short side exposure to. Brazil, intraday short for half an hour. China, big gap down, harsh sell off, 2R exiting near the low of the day. Intel, big win, gap and go above the peak of the RL10. So that's an emerging dragon. Standard risk to the PSAR. All it did was take off, added a position at the 2R battle drill and ran all the way up to 46.50. It rolled over, so I took the skin of the dragon exit. I'll be ready to trade that one again aggressively tomorrow, but we were happy to make bank on this one. 6R on the first position, 4R on the second position, and that's a 10R trade intraday with no overnight risk on a tech leader. That's making a nice little recovery. So we like the heck out of that one. We've been aligned with that one for the last 3 days, and I'm expecting more big moves tomorrow. IP, gap and go for a half an hour. Real estate, Friday's trade that closed well and had a little morning weakness when it recovered, added a second and then a third position. This looks like a place where excess profits from equities are getting stored. So I'm taking a speculation on this one. Have a lot of markets money to fund that. That's about 9R. And we have a nice cushion on that one. Coca-Cola, no trade. Regional banks tried the gap and go. It ran all the way up here, and I escaped for a fractional when I gave back way too much on that one, it feels like. I thought about this one on the short side, but it was not in the zero state, and then missed the move downward. So did not trade that one very well. McDonald's, I like the recovery here, but I wanted to see it follow through tomorrow. There's plenty of room to get on board this tomorrow if it starts moving back up to the 5-day and 10-day high. So we'll be ready for that one because it closed so well above the Bollinger Band main. That looks like a low risk entry for tomorrow. Merck, gap and collapse for 3R. And then after the R10 bottomed out, we take the exit at the skin of the dragon for 3R in the usual way. Microsoft, we covered the trade after the gap down. I wanted to keep the second position in the money for 1R, and then this was 3R. So net 4R on a 2-day trade in Microsoft. Marijuana, rolled over, collapsing dragon for an R. No overnight risk. Nike, gap and drop for 2R, and recovered at and exited at the skin of the dragon after the R10 rolled up. That's the usual exit. NVIDIA, big time win. This was last Friday's trade. Closed well, big gap up. So we have a nice cushion of markets money. That gave us an extra 4R on this initial entry from last Friday. So that funded this one, ran all the way up. Boy, it was hard to pull the trigger on this one, but a bird in the hand is worth two in the bush. This is about a 12R trade all told. And there's room for this to go tomorrow, but I just couldn't live with myself if I had not exited and then experienced a gap down tomorrow. So patience and measured risk. Clean energy missed the gap down, and no trade in Palantir, Rivian, or SPY. SPY just basically stabilized. They had last minute weakness here in the last 30 minutes, I should say. Treasuries also stabilized, but no gains. Tesla, this was a collapsing dragon gap down, intraday short, standard risk, sold off harshly all the way down to 186. And then we took the standard exit when the R10 reversed, standard exit at the skin of the dragon for 4R. So some definite weakness in the market leaders from the last couple of weeks. Walmart, I just missed this one altogether. Missed it Friday, missed it today. Just not good. Oh, as you were. This was Friday's entry. I thought I misread my own chart. That was a 1, 2, 3 entry Friday, and we're holding 4R. So all good. Missed the opportunity to put a second position on, I should have said. US Steel, no trade. This is look at the longer term portfolio. I don't trade this one on 3 minutes. It's not usually volatile enough, but just to show you what this looks like on the longer term daily trade, I decided to start putting a little turbo trade on it. This has been an amazing move in the industrial sectors, the opposite of groovy tech and cyclic finance and energy. This is just mainstream America making things. We're in this strong second leg up, and I decided to add some turbo to it today by looking at the 30-minute. That's probably the shortest time frame I will trade it on. But this was making a new 10-day high and had cleared all previous support. And we got a strong Kata 2 formation. So it's never too late to get on board excellence. And this thing will keep that initial stop pretty wide and see how that goes. Shifting over to sniper trade of the day. Just got one for you today. This is in ETHE. This is last week's consolidation in the afternoon. That's a standard risk box, it turns out. That's about equal to the R10. And then here was a gap up today. The OR3 ran up all the way to here. The breakout occurred in the next bar, and that's my standard R10 risk. So I don't even need to take the full OR3 risk. And from the low of the day, it can move 10 times the size of that box. So I feel comfortable on the way up. If that had failed, I'd be prepared to take the usual exit at that risk box. So oops. So that's the usual entry. Immediately ran up. So you can see within 1 or 2 bars, we're able to get our standard exit from here up into no lose plus dinner for 2, then start locking in pieces of this as you go up. Like a mountain climber putting in protection to lock in the gains. When the R10 rolls over, this is especially true on the 3-minute. When that R10 rolls over, we then raise our stop to the skin of the dragon to lock in the gains, and that one returns 1, 2, little over 2R. Re-entry on a COTA 2 for an extra R. So that nets an additional 3R intraday on ATHE, which helps give it a little cushion for that longer term swing trade that we talked about that we like to hold. So we call that the turbo trade, reinforcing the core trade. Let's go to the traders. Hamad grinds through here. I think we missed a couple stop and reverse opportunities in here. This one should be a stop and reverse, and then that should be the second position. I'm sorry, I misread that. He gets long here, and then that's the re-entry. I misread that. I thought it was shorter. So that's a good trade, both of those. That's 1.4. And then he still is aligned with the winning position there. Scratching out on Apple. There's no movement on that today at all. Pfizer nets a half hour. Wasn't much room, but he did get what was available. That's a good shot right there. This had every opportunity to fail, and that would have paid off large if it had normal things had occurred. The only one we missed was that opening range 3 breakdown, which would have paid pretty nicely. But he does get the rebound trade and locks in 0.9. So well done across the board. Scratching on Disney. Great work on Tesla down here. But again, noticing the weakness in the market. This is a very vulnerable market. When you get the OR3, that short there, man, we'd like to capture that if we could. That's probably 3 to 4R available in here. And even if you don't get that first move, that second entry short here, it's below the VWAP, PSAR falling, river falling. We need to get that. This is Jonathan. Right. We had some discussions on how to calculate these, so I'm going to just take a look at the signals rather than the numbers here. Great trade here. 1, 2, 3 and an OR3 entry. Excellent. I like that one short. When this one doesn't work right away, this is supposed to work right away. When this reverses back above the VWAP, that's a sign. I think you can just scratch that. And then you could take this one here with a same standard risk box that you used over here, and you get this one long to here, probably. I like this COTA 2. This one could even be taken here because you are above a rising PSAR. You're above a rising VWAP. You're above a rising 200 period moving average. That probably is. If that's supposed to be the 30, that doesn't look like it's computed correct. Maybe it is. If that's the 30, then that's even more reason why you could take this one here. Plus, you're in the summer, and then you could even get a second position here. That one feels premature. But you did get the re-entry, so I'm good with that. Good practice, good reps. Nice work here. Yeah, the only this feels like you wanted to trade it more than, and we talked about how if I'm using, let's say, this as my initial 1R after this vigorous move, then if we use that same wide stop over here, then that only becomes a much more manageable, because we expect this to fail a lot more than this one. So let's not be so close that we end up getting a much bigger position size here than there. So if we use that standard position size, we could get out of this with a 0.5 and turn this into a winning day. And we covered that extensively in the coaching session for those of you playing along at home. That's a good exit. I think this short could have been taken here. And then that scratches instead of taking a 0.4. And then we probably would have been postured to take that short right there. Kurt showing some really good work here. Caught a 2. You could even have that stop here, although I appreciate the wider stop. That's a great exit after a reverse up and then comes back, locking in 1. Having the patience to see this roll over with a COTA 2 to the downside. We could have taken that short here. I like this as a COTA 2 on the upside. I love the COTA 2 entry here, but I can live with this one as a collapsing dragon for another 2R. So, I mean, don't change it. That's 3.2. I'll be listening to some babbling old man. Keep doing what you're doing. George working hard. Trust in the numbers. And this is an example of having that locked in from those gains. And then he gets an advantage. You saw that little bump near the end, was willing to hold that, and then gets a rollover exit at the VWAP for 4.5R. Yes, sir. 3 bags full. 1.7 on the stop and reverse, netting 0.7 for the day. That's a great shot short and way to cash it. That's being mindful of your balance sheet there. And so is this one. It starts working and then it fails at the same level. This is such a good exit. This thing gets to here and starts failing. This is like a headwind pushing everything down. And it couldn't even get back to the previous peak. So when that rolls over, he gets a 1, 2, 3 entry or exit there and is still able to make a little bit of a bank instead of sticking around for those lower losses. When it fails to follow through, that's information, and that's a great exit. Micro losses, reasonable shots in the S&P. This is now a double top. So today was a nothing day. The little surge immediately failed and then closed poorly. That is a bad sign for tomorrow. So this was a chance to try it here. It didn't work, but I'd be ready to get short on this one. If it violates below, say, 511.50, I'm ready to really smash this with the idea that it could come all the way back to 507 tomorrow. The air is getting a little thin up here. Let's try that one again. This will be a quick look at the daily report. This is what an extended market looks like. I mean, a legendary move, almost three standard deviations of outrageous performance on the 90-day move. That's how strong that 90-day move has been. But today it rolled over and closed poorly near the low of the day, still well above the Bollinger Band mean, well above the PSAR. That's what the beginning of profit taking looks like. And it's easier to see on the 30-day look back. It was a narrow range day for sure, but that rollover closed poorly. And to me, you got to have your stop at least here. And short not later than here. It could even get short here, thinking about a move back to the Bollinger Band mean. This would be the least surprising move. Is the reversion to the mean after all of that nice move. So if you just take a look at how long and strong were the sell-offs. Here's one that's that big from the peak down to the belly, and then it recovered. And then from the peak down here to the belly, same size. From the peak down to the belly, same size sell-off. So if this was the peak, how far can that go? All the way to the PSAR. This would be a normal noise move. A second leg would take it down to the Bollinger Band mean. If that cracks, the 10-day low, and then if that cracks, the 30-day low. So you can see there's a step ladder of downward moves. And to me, I think you got to have your stop at the skin of the dragon because this is rolling over. That's why to me 509. Everything below 509 is my money, and I'm only giving it that much room to play with. I'm going to be stingy on that one. Little bit of weakness creeping in, bullish normal. The volatility below the zero line says there's always a chance for that surprise sharp downward move. So we're mindful that that's what risk off means, that this is not a time to be getting exaggerated long with leverage. No, because we're already at extraordinarily high levels, and you got to take advantage of that on the way up, not come late to the party. In the large caps, a mixed bag. There were still things like Apple suffering, making a new 3-month low. Although all the industrials, Caterpillar and energy like Chevron and Disney and DuPont, big wins. JP Morgan in finance, wins in IBM and Intel. So Intel is especially of interest, and NVIDIA. So the whole chip sector is what contributed to the strength of the market today. But there was some weakness creeping in Chevron, Merck, Pfizer, Travelers. So there's some big names that are starting to crack a little bit here. So the globals were generally pretty good, and the defensive plays. There's gold. Real estate, I like that in the U.S. U.S. mid caps are taking on a leadership role. Materials. and utilities. So some defensive plays there. Handful of auto framers. Can see all the framing data for trading one day at a time. I like that Brazil is here because if that breaks, it's already 3 full ranges below its 10-day high. And so if that fails below 32.89, the initial stop, then that's an automatic stop and reverse short. Or if it doesn't even hit the mechanical entry, but just breaks through that low, that's an auto short. Handful of squeezes. The S&P, the tech, McDonald's, mid caps, all of the crucial leaders. Tight range compression. Some amazing reward to risk ratios here in the Sniper auto framer. 8-1 on Rivian, 3-1 on Brazil, 2.5-1 on McDonald's. I like that. Mexico, 1.7-1, and today showed weakness. I like marijuana as on the short side. It's such a volatile symbol that we can trade in either direction, but this is well postured in a critical state. Tale of two markets in the large caps today. For every outstanding, excellent performer, there was another one that got taken out and murdered today. Murdered success. Murdered success. So a tale of two markets. Some weakness in here. Oil exploration and XLY, that's Tesla, Amazon, and Home Depot makes up 30% of that. So some core American companies showing weak, and energy just weak. But a few key leaders here, mid caps and the Russell mid caps, and the real estate still pretty good. And the industrial sector just as strong as you please. Trading value symbols here. Marijuana, Tesla, and clean energy are top 3. There's your Devon Energy, and then the 2 semiconductors, NVIDIA and Intel. Metals and mining for Alcoa and Cliff, like that a lot. Let's see what else we got here. Yeah, the RL90 showing definite signs of rolling over and getting weak. Instead of being in continuous upward mode, it's coming back to normal. The 30 is rolling over. The 10 is rolling over as well. And this starting to feel a little choppy near the, and you look back and say, yeah, it's well above 500. Yeah, but lately starting to show some weakness. That's why, to me, 509 is your key price level to lock in all of these abnormal gains. You can't let the big fish get away. All right, that's everything we got for today. We'll get this published and posted. Thanks for your kind attention.